Hello and welcome to Africa Trade South Africa. My name is Nozi Poshabalala and it is an absolute privilege to be with you once again this year. Now, you'll recall that last year when we had this hybrid conference, we really focused on the opportunities that could be unlocked from the African Continental Free Trade Agreement. And we asked the question, how do we unlock these opportunities from a South African perspective? Today, we're building on last year's conversation and we're bringing into sharp focus how we can unlock opportunities for women and youth in the African Continental Free Trade Agreement. And we're asking the question through an all-female panel who over the next hour are going to be sharing their insights, their experiences around working with the focus on women and youth in their various capacities, and what are the lessons that we can lift from those experiences to apply to this particular conversation. As always, we're joined by an online audience as well, and so we're extending a special invitation to you to please send us your questions and your comments through the chat, and we're going to try to the best of our abilities to integrate your voice into the conversation as well. It gives me great pleasure now to introduce our panelists. We're joined by Portia Dube. Portia is with the She is, of course, with the ECIC, which is the Export Credit Insurance Corporation of South Africa. She's a business development manager and has taken up that role since 2015 and joins us today to share some of her insights. We're also joined by Fadzai Musoni Nyamatswe, and Fadzai is a general manager looking after growth and diversification at Transnet and really is looking at how to unlock the Africa growth strategy for the SOE. Michelle Knowles joins us today, and Michelle is the Pan-Africa Head of Trade, Finance, Product and Governance, and this with the ABSA Group in the Corporate Investment and Investment Banking Division at the ABSA Group. And so we're looking forward to getting that perspective from a regional bank. And we're rounding up this panel discussion with the COO of Africa 50, and that's Tepidi Moromong. Thank you so much, Tepidi, for being here. And of course, Africa 50 is an infrastructure investment platform. Interestingly to know is that Africa 50's shareholders at the moment include 29 African countries, 2 African central banks, as well as the African Development Bank. And so lots of insights that I think we can lift from Tepidi in the conversation as well. So maybe let me start us off with Portia. Let's start off with you. Let's bring in the view of the work of the ECIC and the extent to which some of your own social development work has touched on these particular population target that we're looking at, that is women and youth. And perhaps you could share with us, what is the ECIC doing in that regard? More importantly, what lessons do you think you can extrapolate for us to think about how do we better serve women and how do we better serve youth as we think about this trade agreement for the continent?
As the ECIC, our mandate is to facilitate the export of capital goods as well as services from South Africa to the rest of the continent. We do that by providing political and commercial risk insurance to South African financial institutions to support buyer initiatives. And we also provide the same cover to South African manufacturers and exporters. Now, from an AfCFTA point of view, we are providing cover to your smaller institutions and expanding access to finance. As the ECIC, we have developed some initiatives to enable smaller businesses, particularly youth and women, to expand their horizons. And our social development program supports the business by providing them with various needs. We assess them, and if they need finance or investment in capital to enable them to be export ready, we do that. On the wider scale, it's our usual business, which is once they win the business, facilitating the access or the lines to enable them to fulfill the contracts that they may have been awarded. In those instances, it could be providing cover for working capital facilities or in instances where they are required to put up guarantees or cash bonds. It could be performance guarantees, advance payment guarantees. We cover the bank that is issuing the guarantees on their behalf so that they do not have to put up 100% cash collateral. So we look at various ways, not just from the point of view where they've won the business, but to enable them to get to a stage where they can actually be a player, move from minor or informal into the bigger formalized sector. And that's how we develop the markets for exports.
Portia, I think it's an incredible way to start off the conversation. And what I'm hearing you saying is that essentially the ECIC is de-risking women and youth. And so my follow-up question to you is, are there any unique challenges that you are confronted with, particularly from women-led manufacturing businesses or export-led businesses or youth-led manufacturing or export-led businesses? Are there any unique challenges that are different from other businesses that you encounter?
I would say, I think from a youth and a women perspective, the statistics show that growing sector, or there are more entrants, if I may put it that way. And it's more difficult to get a credit line when you've just been trading for a year or two. It's also very difficult when perhaps you've been operating in your regular sphere. So what our cover does is that it opens up opportunities into new markets. Because what people are most concerned about when they go cross-border is they don't know, they're not that familiar with the market. They don't know if they'll be paid. And our cover from a political risk perspective assists with that. So we're covering things like currency and convertibility and unavailability. So which will enable one to be able to get their dollars once they've exported into the region. There's also access to those projects, because in my role, we go and we identify potential projects that are still at inception stage, and we also participate in matchmaking those opportunities to South African manufacturers. So it helps them to have access, I suppose, to those wider markets. It also assists them in terms of getting into bigger transactions. One of the most recent developments as well from an ECIC perspective is that we are now covering subcontractors. Previously, we would be focusing on the entity that has been awarded the EPC contract, but we recognize that there are a lot of players, the youth, the women, the small businesses that feed into those bigger contracts. So we're now developing a product to be able to cover them as well.
Yeah, Portia, I'm sure we're going to come back to some of the issues that you've raised, because I think these are really important. So the opportunity to extend credit lines into new markets, you speak about, in fact, easing doing business in new markets, and the idea of bigger contractors, but also this really interesting and innovative approach of how do you then de-risk subcontractors as well in how you approach your customers. And I'm sure we're going to get an opportunity to come back to that. But for now, let's go to Fadzai, and we want to bring in the Transnet experience now, Fadzai. When we think about just the last 2 years and we're thinking about the impact of the global pandemic, we're thinking about climate issues closer to home, we're thinking about the floods in KZN and other regions, and all of these, of course, causing major disruption to trade activities across the region, but certainly across the continent as well. What role, in your view, has Transnet played in increasing the resilience of cross-border trade, in particular, again, with the focus on women and young people who rely on those trade activities? Your thoughts on that, please, Fadzai.
Thank you. I think one of the most confronting issues we've had is just how prepared we were for the number of disruptions that have come to our doors in the last couple of years. I think particularly we certainly were not prepared for the floods, and even recently now with the war that is happening between Russia and Ukraine and the effect that has had on trade. And so as an organization, as Transnet, it's really brought us to question on our preparedness and what we need to do in order for us to ensure that there's continuity in terms of trade. And so one of the big pillars of what we are driving at the moment, particularly when it comes to cross-border trade, is our planning and readiness, particularly planning for these types of disruptions that are usually unforeseen. And you will see, particularly, I think the lessons learned we had from the KZN floods is how quickly we were able to rally up all of the assistance that we needed from a construction and assessment perspective, and be able to have both the ports and the rail, as well as the roads that are leading to the ports, up and running within a very short period of time. And I think that does go to credit to all the people that came together and rallying up to that. What that led to is basically looking at how, as a port, we may have some blind spots in terms of how we connect to the rest of the value chain, and how important it is for us to have multiple ways in which we are able to facilitate trade. And I think this comes back to speaking to how our mostly young people and women trade, which is mostly from informal and moving into a more formal practice, and allowing them to have access to our ports. And so we have a specific strategy that we're working on that is focusing on how we can look at other back of port areas, as well as areas that are not necessarily in the port vicinity, and be able to consolidate those areas for trade, but also particularly looking at different channels in which we can facilitate trade, whether it's by road, by rail, or even by air. And so that is something that we've, I think, over the past few months have been looking at how best can we actually be reacting to a lot of these disruptions that are coming, particularly when it comes to climate change. And then looking at how then that translates into cross-border trade. We've certainly been also sitting together with our peers within the region, particularly our shared hinterland being Mozambique, Namibia, and on rail all the way up to the DRC through Zimbabwe and Zambia. And in that, we are also looking at corridor planning. So we are looking at how do we lower the cost of doing business across the various region. And one of the key pilots that we have just started, you may have seen, is that we have collaborated with the Mozambican rail operator to allow a borderless, or what we say seamless transition of goods, which means that we actually don't consider the border ports between Mozambique and South Africa, and allow our trains to actually run through both in the Mozambican side as well as the South African side. And I think we will see that that will improve our efficiency, but also lower the cost of doing business on that corridor. Thanks.
Yeah, Fatai, thank you very much. It's not only comprehensive, but it's a deeply insightful response. A quick follow-up, Fatai, on that. And how do we ensure that women and young people don't get crowded out of this really innovative strategy? Is there an intentionality around making sure that women and young people are really the active participants that you're reaching through this back of port strategy?
Most certainly. I think it's been a challenge for many years, which is providing access to our SMEs and QSCs, and most of these are obviously either youth or women owned. And as you've said, the issue of crowding out and being able to provide capacity is an ongoing challenge. However, what we are trying to do is provide facilities that can consolidate, because as you can imagine, scale is quite important. So if we can get 50, 100 small SMEs to consolidate their goods in a particular area, and then be able to then transport those in much larger pockets, that makes it a lot easier, particularly when we start looking at access and slots allocation. And so that is something that's been very much intended to to assist our youth-owned and women-owned SMEs, particularly that are emerging miners or emerging customers of trade, to be able to gain access to our rail and port infrastructure.
Yeah, Fatai, thank you so much. And of course, as you speak about consolidation for scale, the question that always arises is that who then takes up that role of consolidating, or is there enough networking amongst women and youth-owned players on the ground for them to do this organically? And perhaps it's a question that we're going to come back to. Some beautiful questions are coming through from the online audience, and I'm going to pull them in a short while. But maybe, Michelle, let me come to you first before I do that. What are the challenges that are faced by regional banks in their attempt to be a part of the solution and to facilitate cross-border trade? And maybe you can also comment on what are some of the initiatives that we're seeing banks actually taking on to really overcome those challenges and to really ensure that they are enablers in the ecosystem instead of obstacles in the system?
Thanks, Nazi. I think that's a great question. I think the starting point is really that for the first time, policymakers really understand that enabling intracontinental trade is one of the key drivers for economic growth in Africa. And naturally, access to trade finance is key in facilitating these trade flows. Yet, despite this, trade finance remains probably one of the biggest challenges in Africa. The trade finance gap sits anywhere between probably $90 to $110 billion. So that means only 25% of demand is actually currently being met. Of course, that gap was further impacted by both the COVID-19 pandemic, but also the geopolitical tensions that we're currently seeing. So whilst SMEs are recognized as the biggest drivers of economic growth and Africa trade, among many of the challenges they face is lack of access to finance, in particular trade finance. And access to trade finance is often identified as one of the critical barriers to growth. So if you look at what are some of these contributing factors to the gap, really number one is regulatory challenges. It's often listed as the main constraint in providing trade finance. This is in addition to the higher capital treatment for trade finance, and again places quite significant strain on the banks that are trying to provide these services to their clients, of course in particular to SMEs. And then there's also the issue around the availability of foreign currency liquidity and the impact this has on the accessibility to trade finance. I think a key focus for all the banks needs to be helping SMEs gain access to trade finance by reducing trade-related transaction costs. I think that's been mentioned in some of the previous discussions as well. And then also help them better integrate, not just into world trade, but also obviously into regional trade. From a bank perspective, and specifically ABSA, trade finance has always formed an integral part of our strategy. We continue to accelerate our efforts to be a key provider of trade finance on the continent. And we do this through partnering with DFIs, so raising in excess of $600 million of additional liquidity that can be used to support trade finance. And then also addressing some of the key challenges that the SMEs face, I think similar to the points that Portia raised, making sure that the solutions include unsecured options. So the traditional forms of collateral are not required, or financing products and solutions that help them earlier on in their cash conversion cycle. And we've also got solutions, supply chain finance solutions, which provide off-balance sheet financing, either through structures like payables or even receivables financing. And of course, you pull this all together by offering this through digital capability that helps, again, to reduce the cost of transacting, but also ensures that you get a greater reach in terms of accessibility.
Michelle, thank you very much. Again, as you speak about the broader value chain, speaking about the role of banks, you can see the attempts to overcome the regulatory challenges that exist to really try and get that access, but also the integration in. I'm interested in knowing whether there's been any target setting in particular around, if we're looking at the activities of the bank, targets that are being set around how much do we want to achieve when it comes to trade finance for women and young people? And again, I'm asking this question because we can see how crowding out of women and youth can sometimes happen without that being the intended, but that becomes the consequence. And so are banks tying themselves to particular targets around this particular segment?
Look, I think SMEs and particular access to trade finance for SMEs is a topic that is and has received a huge amount of discussion within banks. And I think that's local, regional, as well as global banks, because we recognize that they are the most vulnerable part of supply chains. And beyond that, there's a lot of interest and focus by corporate companies to make sure that they are protecting and ensuring the sustainability and resilience of supply chains by ensuring that they are also equally stepping in to support their smaller suppliers. And often, I think to the point raised, that is women and youth in particular, when you look at the sort of lower end of the micro enterprises. So I think there is a huge amount of focus. You know, certainly within ABSA, we've got dedicated teams and business units that look solely after SME financing, focusing specifically on women initiatives, on youth initiatives, and constantly monitoring in terms of what is our lending appetite against these sectors. How do we better support? You'll see that through some of the innovation coming through on digital side, but also on the lending side. So there is a huge amount of focus by banks and other key players, the DFIs and multilaterals, working with the likes of ECIC, just to ensure that we can increase the balance sheet lend into these important and vulnerable sectors. There are some systemic issues that we need to deal, the issues around regulatory, the issues around liquidity in the market, and equally around capital requirements. These are being driven by industry forums, again, globally, also on the continent, to make sure that there's active engagement with regulators and policymakers so that they do understand the unintended consequences that some of the policy and regulatory requirements have on particular funding to SMEs.
Yeah, Michelle, you've given us a beautiful leeway to go to Tepidi to talk a little bit about some of those systemic issues. So Tepidi, as we come to you, again, reminding ourselves that AfCFTA, when we think about the shareholders, we're talking about 29 African countries, 2 central banks. It's the African Development Bank as well. So one would imagine that there's a lot of conversation and focus on regulation and policy. And so the question to you is, what kind of policy initiatives could be more effective in ensuring the meaningful participation of women and youth in the free trade agreement? And how could this speak to some of the systemic issues that Michelle has raised in her response?
Thanks, Nazi. I think it's important, the conversation that we're having today is very important. And mainly because if you look at the African continent, 60% of the population is under 25. So youth is critical. 70% of traders on the continent, formal traders, are women. So critical conversation that we're having, and it's important that as our governments, as you rightly say, they need to play a key role in providing an enabling environment. I think with the AfCFTA, the beauty now is that there's regional consensus and there's a long-term framework that really transcends borders. And I like the word that you used earlier around intentionality, right? What is the intentionality, be it government and the private sector, specifically to create the enabling environment and policies that are targeted towards women? So I think many of our governments have started in trying to create that enabling environment. I think there's still a lot more that can be done. I think there's certain concrete areas that can be taken. I think key is really around business formation, right? We know that the cost of setting up businesses on the continent for SMEs is expensive. So how do we simplify business formation through digitalization, right? I think several of our panelists have spoken about digitalization being a critical factor. How do we better protect intellectual property so entrepreneurs are more confident that their ideas will be safeguarded? Can we use tax exemptions to lessen the cost of starting up businesses? I think one of the things we don't talk enough about is education, right? So how do we incorporate entrepreneurship curricula into our education systems? One, to to promote creativity and innovation to youth at a much earlier stage and help them set up when they become entrepreneurs in the future. Key, I think what was brought up earlier is really around corruption. How do we enforce anti-corruption laws? And by doing so, really, I think it's also around how do you digitize processes and payments that are prone to corruption. And from where we stand is also building the local and regional infrastructure, one that will allow both women and youth to access broader markets. So how do we work with institutions like Transnet to make sure that our infrastructure at borders, our road infrastructure, is adequate for youth and women and the general economy as a whole? I think we've spoken quite a bit about lack of access to finance. Michelle, I think, addressed that very well. So really, when we talk about access to finance, I think key for me is the types of products. So how do we drive innovation, and how do governments make sure that they establish that enabling environment for innovation to thrive? Do we look at financing? Do we look at venture capital, for instance? So I think part of the time when we're talking financing, it's always around credit extension. But how do we ensure that we have venture capital where we're looking at early stage financing for our businesses? So I think all of these measures will really help in promoting entrepreneurship, help target and assist our female as well as our youth entrepreneurs in the continent as a whole.
Tipiti, thank you very much. I think you've raised a range of very important questions. I love the way you responded by raising questions to our consciousness around the things that we've got to grapple with to really ensure that there is a greater number of young people and women who are actively participating as entrepreneurs across borders. Maybe a quick follow-up question to you is, of these questions, which is the one that you would say AfCFTA is most engaged with right now? What would you say AfCFTA is really focusing on to say this is a lever which we understand that there is no silver bullet, but this is a lever that we're looking to pull that we know would enable us to see progress or meaningful progress in terms of the participation of women and young people? Of all the questions that we've raised, which is the one that is keeping you up awake at night right now?
I think, Nozi, in order for AfCFTA to be successful, ensuring that you have the right infrastructure, adequate infrastructure on the continent is critical. So how is it that we move goods, right, from one country to another? How do you move goods from the hinterlands to the center? So all of this is critical for both women and youth in being able to get their services or their goods to market.
It's how do we move from the hinterlands to the centers, beautifully phrased, but really speaks about the move of ensuring that we're really focusing unapologetically on young people and women who would otherwise be at the periphery. I want to pick up a question from the chat, and maybe Portia, let me put it to you, and anybody else who'd like to weigh in on the question. The question is, Afrexim Bank has created the PUPs and the MANSA, which are of course instruments to aid inter-Africa trade and to reduce counterparty risk. However, is the AfCFTA planning to make these platforms affordable for women entrepreneurs? And this is a question from Olufemi Akintorimi from Lagos in Nigeria. How do we make it affordable for women to participate? And Portia, I'm bringing this question to you because I'm thinking about the insurance instruments and insurance products. What is the thinking around the affordability, in particular for women and young people? So maybe if you can take that question from Olufemi, and then we'll come back with another question to you.
I think I'll take a stab at it, but maybe Michelle would be able to help a little bit better there, because that has to do with more around knowing your clients and knowing your customer. And from an ECIC perspective, that is an expense that we take on our side. So I think those platforms really are to assist individuals or small businesses that are venturing into new markets, to give them a certain or an additional layer of comfort that they are trading with someone who is known, that has been to a certain extent vetted, because those platforms are there to almost create a supply and a trade database, as far as I understand them.
I think I'm going to pick that up. And so what I'm hearing you say is that, Michelle, we're going to bring your voice in around this question. It's a question around affordability. How do we make sure that instruments and products that we're putting out there for women and young people are taking the affordability lens on as well? But Portia, thank you very much for bringing again into sharp focus that the ECIC and maybe other players as well look at that and absorb that cost themselves, because that too is another way of ensuring that access becomes within reach for this particular segment. Michelle, from a banking perspective, how do you deal with the affordability question?
I think it's a great question and a very valid one, because it's one of the reasons why we don't see, I think from a financing, in particular trade finance perspective, the levels of access to trade finance. And we look at it on different levels. There's affordability from a capital perspective. So that is the capital that banks hold against any loan or lending or financing that they do. And that talks to one of those key constraints that I mentioned. It's, the unintended consequence of regulation and the additional cost that places, which then impacts affordability to SMEs, in particular women and youth. So we look at it, and from a banking perspective, we've got different strategies in place in terms of how we try and de-risk to reduce that cost and ensure that we've got greater reach into the critical segments. There's other aspects of affordability, transaction costs. That's where digitization becomes so important, because you're able to scale, and you can scale at a much bigger or at a much greater rate, should I say. So digital is one of the elements, and that's really where the payment settlement system comes in. I of course don't want to speak on behalf of a Frexham Bank, but I think what they have been instrumental in doing on the continent is creating different technologies and capabilities that banks are then able to use, all in attempts to either connect traders, to reduce transaction costs, and also to address some of the challenges like the KYC, AML. All of those components actually add cost, which then impact the affordability to the point in the question that was raised. So there's a lot happening. We need the support of our regulators to come in specifically on capital, and there is a lot of engagements that are already underway with regulators at industry levels and in individual bank levels to address that. But I think specifically the intent of all these technologies, it's why we haven't yet seen success with some of the really innovative fintech technologies that have been developed in the more in the developed markets. It's really around affordability. So we want to see a lot more innovation and fintech coming from the continent, because we believe that will have greater scale. So I think affordability is top of mind. It's why Frexham and other institutions are creating these type of capabilities, is to ensure that they're supporting the banks and other lenders in order to reduce overall cost of financing and increase accessibility.
Yeah, Michelle, thank you very much. You reminded me of the comment from Tsepidi earlier on, where Tsepidi was speaking about a beautiful question saying, how do we simplify through digitization? And Tsepidi, I'm sure it's something that we're going to get to. I want to pick up one more question from the chat, so I'm going to just go to the top there so that I can pick up that question. And here it is. It says, we are seeing an increasing number of women and young people involved in small and medium-sized enterprises, particularly in agriculture. How do we grow their businesses, as they often have limited access to information, to credit, as well as the gender norms that they are operating within? And this is a question from Aileen Nchanji. Tipidi, I want to bring that question to you, because you left us with a beautiful phrase about how do we move from the hinterlands to the center. And oftentimes the agricultural sector is often at the hinterlands. It's often in the periphery and not really the sharp focus in the center. So if there is a trend that suggests that we're seeing more women, we're seeing more young people in that sector, how should we be thinking about how do we better support the agricultural sector in its attempts to open up and become a place of trade for all?
Thanks for that, Nozi. I think, as we all know, agriculture is critical to all of our economies. I think the Ukraine crisis has actually amplified that even more so. During COVID, our supply chains were affected. So it's critical that we all take a real concerted effort in seeing how, one, we scale up agriculture across the board. So I think what has been done previously, and I think we should still continue to drive, is outgrower schemes. So the large agricultural businesses, how do they bring together the smaller scale agricultural players, be they youth, be they women, in bringing them into their ecosystem and ensuring that they can provide the necessary equipment, the capacity building that is required. I think digitization is also key, agri-tech. So how is it that we drive agri-tech, be it from providing insurance products? I think for too long, climate change, a lot of our agricultural production to date is really subject to the vagaries of climate. So how do we bring in agri-tech, one, from a detection perspective when it comes to climate, understanding rain patterns? How is it that we bring it in from an insurance perspective? But I think critically is, how do you create an ecosystem within each of our markets and work with the larger players to bring in and consolidate the smaller players in each of our markets?
Yeah, it's a beautiful link back to Fadzai. I want to come to you because you spoke to us about the opportunities around consolidation for scale and how that might be one of the sure pathways in order to get more women and young people participating. So I want to just go back to that a little bit and talk about, how do we then go about the job of consolidating, one, but two, how do we do that with a firm eye on gender disparities, especially when it comes to women? And of course, one of the things that has been unsaid in this conversation is that we're talking about young women as well. So, that particular segment that is both youthful and a woman who's wanting to participate in this space. So to you, Fadzai, what opportunities do you see for us right now to use consolidation and scale as one of the ways to address some of those gender disparities?
Thank you, Nozi. So I think that the key is really working together with all the facets that are required to have a successful either beneficiation or industrial zone. Particularly, I think the financing is one big element, and so if we can particularly focus on funding and facilitating financing to these particular groups in order for us to then allow them to have access to either whether it's a back of port facility or a special industrial zone that then sees this consolidation happening. I don't think we have an issue issue of space or allocation, particularly when it comes to areas surrounding our ports, particularly when it comes to areas surrounding whether it's farming land or other industrial areas. The issue is then coming together and bringing all the different facets that are required, whether it's from a risk insurance perspective, capacity building, particularly the training of actually being able to run this at a much larger scale, and then funding these particular cooperatives, if we talk particularly in the agriculture space. So it's really a matter of having the right facilitators coming together to actually enable the various groups. And I think there's enough advocacy around the matter. It's really just now a matter of identifying particular areas of interest. And I think agriculture and food security becomes quite critical, as you've heard from Tapidi talking about what has happened, particularly with the reality of the Ukraine crisis. So looking at particular industrial zones and some of the trade access that comes with that, particularly the reduction of taxes, etc., is already in place to some extent. And it's really just a matter of now bringing that together. And I think from our perspective as Transnet, we are heavily reliant as well on the private sector and the particular industrial specialists to come in on board and work with us while we provide and facilitate, whether it's by land or by facilitation of access. And then that can then allow us to be able to build this together. It's really not, I guess, a one-man approach. It really is multi-pronged and needs to be brought together with one objective.
Yeah, it's not a one-man or one-woman approach, but certainly needs everyone at the helm. But my apologies, Fadzai, what I'm hearing you say, which I think is incredibly important, is that there's no reinvention of the wheel necessary. You've spoken about special industrial zones. We know this. We've been talking about those for a while. You've spoken about looking at the tax incentives. We've been talking about that for decades. We've spoken about cooperatives. I mean, these are part and part of our culture and how we do things. And what I'm hearing you saying is that we've got enough advocacy. Now we just need to do it. And it comes back to that question of intentionality. And that's why I was asking Michelle about the targets, to say, have we drawn a line in the sand to say, this is what we're going to do? And I love your response, because it is really about people, men and women, getting in and getting the job done now to make sure that the free trade agreement actually works for women, actually works for young people, and actually works for young women in particular. So, Portia, I want to go back to you. I love the comment you made about looking at subcontractors. And one would imagine that it takes not only a courageous business model, but a courageous thinking to be able to make those shifts. Looking at subcontractors, making sure that women and young people are part of bigger transactions, looking at matching opportunities so that the finance or at least the credit risk insurance follows them around real opportunities. The question that I have for you is slightly unfair, but I hope you'll take it. And the question is, what new opportunities, in and above what you've already shared, what new opportunities can the agreement present for women, and what role do you see the ECIC playing in any way or form in this regard to unlock the new stuff, the things that we're not yet doing right now?
So, I mean, the most obvious is access to new markets. It's if you look at the way the region is set up historically, within the SADC region, I think the trade and we know each other well, we know our clients, and ECOWAS is the same. And if you look at the East Africa bloc, also the same. What this opportunity brings for us is the ability to access more markets. It's literally from Cape to Cairo, is how I see it. If you look at the fact that Africa accounts for just 4% of the world trade, that shows you that there is scope for growth for our South African manufacturers and contractors. I think what excites me the most about our program, I spoke earlier about the enterprise and the supplier development program, is that we've had, it's been accessed by at least 49% women and 19% youth. So that shows you that's where the need is from the training perspective, from finance, from capital equipment, because when we're supporting at that level, at grassroots level, that's what we're assisting them to access. Now, when we look at the new opportunities, I think the protocols that are being designed and that are being put in place for trading of goods and services, the intellectual property rights, I think Sifiso mentioned that earlier, all of that ensure that these emerging enterprises, these small businesses are protected as they are pursuing these opportunities onto the rest of the continent. I think the other key thing that we can, it's literally that growth from micro to large scale, because I think when we talk about ECIC wrapping transactions, to break it down, it's effectively substituting the risk of that enterprise or that buyer with that of South African government, which enables the financial institution to give them more finance, to give them increased lines, to give them preferential rates in terms of the borrowing, so that benefit on the pricing is passed on to them, which enables them to make more profit. It enables them to also not worry about the payment risk when we cover the buyer in terms of payment. Therefore, they can focus on sourcing new business, supplying in the value chain, and not worry about tracing or tracking their payments effectively, because we will have wrapped that risk. I think also that the reduction in tariffs and the simplifying of trade regime, if I mentioned some of these things, it makes it more affordable for these entities or these smaller entities. And usually it is the women-led and the youth-led entities that are smaller, because they are new entrants, they're growing their business. Yes, they are in some instances your bigger clients, but for the most part, our role and what this process brings is that it almost levels the playing field to assist them to come into the market and to access the market. I think also one of the social impacts on trade, and it's always been well talked about and studied, is issues of just even violence. So most times, especially on the informal side, women encounter a lot of violence, their goods confiscated. It's just safety in terms of that movement across borders. And I think what this brings about is just more protection for women and a bigger opportunity for them to grow, I suppose, from being micro to macro.
Sure. Thank you very much for that, Portia. I think you've brought into a conversation a missing element, and that is, of course, the lived experience of being vulnerable to violence, to security risks that women face, particularly as they go and try to do their business across borders. And it's really interesting and encouraging to see players like the ECIC looking at that particular experience and phenomena and really stepping up into that space. And again, it speaks about the posture that the ECIC is taking in relation to women and young people looking to be a part of the free trade agreement and all that it has to offer. So thank you very much for raising that, in addition, of course, to all of the other possibilities that you have put onto the table. Tepidi, I do want us to talk about something that we haven't touched on really as well, and that is the infrastructure funding gap. I think it was in one of the earlier comments, I think Fadzai spoke about, their lessons from COVID-19 and realizing some of the blind spots around preparedness, but also having to then reach out to the broader infrastructure value chain to quickly get back on track from a port and rail perspective. So we know that infrastructure is important. We've known this for a while, but we also know that the funding gap is not closing fast enough. I think the latest numbers show the funding gap in Africa to be sitting between $68 and $108 billion. The question to you is, what do we need to do differently to accelerate the pace of closing that infrastructure funding gap? Because we know infrastructure is a key enabler to cross-border trade, whether we're looking at it through the lens of women, young people, or any other trader for that matter. Your thoughts on that, Tshepedi, please?
So I think, the infrastructure financing traditionally has been funded by governments, right? And I think what we've come to realize that government funding is insufficient. So really the genesis of Africa 50 was just that. African governments realizing that they could not fund it alone, but more importantly, they needed to scale up and speed up the delivery and the implementation of infrastructure on the continent. What's critical to understand is that from a funding gap perspective, where we have seen the issue is with regards to the early stage, right? So how is it that projects are prepared and are developed? There's a McKinsey study that showed that on the continent, 90% of projects fail. And a large number of them fail because they don't have the requisite technical studies, don't have the requisite feasibility studies, the business plans have been insufficiently undertaken. So our role as Africa 50 is really to look at that aspect. I mean, critical to us is how do we make sure that we develop projects from concept to bankability, right? How do we accelerate the implementation of infrastructure on the continent as a whole? And then finally is how do we mobilize capital from the private sector to be able to invest in infrastructure as a whole? So it's really critical for us to see more players focusing on this aspect of infrastructure development, which is the project preparation and project development. It's riskier, right? That's where you deploy equity, financing capital versus project finance that we're traditionally used to. I think when it comes to what we're doing, sort of what excites us as an organization in driving the AfCFTA mandate is all the projects that we're doing on the continent. We're currently the lead developer for a bridge, what we call the Two Congo Bridge project. And what this is doing is linking the two closest cities on the capital in the world, two closest capital cities in the world. And this is Kinshasa, DRC, and Brazzaville, Republic of Congo. And the distance between the two is less than 2 kilometers. We're building a 1.5 kilometer bridge. This is a legacy project that has been in the making for many years. And really through Africa 50, working with its two shareholders, DRC and the Republic of Congo, we're able to bring together work together with the two governments, get the technical studies underway, and we're now currently out in the market looking for contractors for this. So this really shows the role that institutions such as Africa 50 can play in accelerating and getting projects such as this off the ground. There are many other projects that we're working on. We're working on a project in Guinea right now in expanding the airport. And, that creates access to other markets for traders in Guinea, for, the economy in Guinea to be able to access other markets, etc. So I think overall, the key for us is how do we get more institutions focused on project development and preparation? Once you have a bankable project, it's that much easier to get financing. Institutions such as ECIC can then come in and back institutions such as ABSA in providing the project financing that is required.
Yeah, it's a shocking statistic or stat rather, Tsepidi, where you say 90% of projects fail. And so what I'm hearing you say is your call to action. How do we get more institutions and players to get into that space of getting projects from concept to bankability, and then of course opening up the opportunities from there. And thank you very much for sharing the work that you're doing between Kinshasa and Brazzaville. We'll certainly be going to be keeping an eye on those particular developments. I know we're almost out of time, but I think it would be completely amiss for us not to just spend the last couple of minutes talking about digitization. And Michelle, I'm going to come to you with this one. When it comes to digitization, what is the most exciting thing happening right now? Because it's come up and time and again in the conversation that we need to think about digitization as an enabler. We need to think about it as a way of simplifying access. What is the most exciting thing that you're seeing right now?
Yeah, I think that's a great question again. And there's so much debate around how digitization is one of the mechanisms that can be used to democratize trade finance and increase accessibility. And it addresses all the issues that we've raised previously around reducing transaction costs, etc. You know, if I just take a little bit of a step back, we saw such a acceleration of the adoption of digital, specifically digital trade finance solutions. And that was really in an effort to transform the industry. You know, we got to a point in time, this is a business that is very manual, it's very paper intensive, and everything just shut down. But the world had to continue, trade had to continue. And you saw this massive push from all elements of the trade ecosystem, banks and clients themselves and many other parties, to understand how we adapted really quickly in order to make sure that trade flows could still happen and trade finance could still be accessed. So I think that was a pivotal turning point for the industry and the ecosystem globally. And one of the mechanisms that we continuously have to focus on to ensure that, you know, we continue to drive accessibility and drive down costs. I think there is a huge amount of innovation happening. There's a lot of fintechs. We're engaging with many fintechs, both you know, on the continent, also globally. There's a lot of focus on how you can use technologies like blockchain to drive down the cost, or mobile banking. You know, we've seen the success of mobile banking in markets like Kenya, and some of the other markets as well. There is a huge amount of innovation. There's no lack of digital capability. I think perhaps where we just need to take a little bit of a step back and focus is making sure that we're addressing the issue around scale and sustainability. So there's a lot of good technology, but they're very siloed, so they can't scale. And of course, the scale and sustainability is what we need to access and assist the SMEs. So there's a big focus from an interoperability perspective. How do we ensure interoperability, that banks and all parties can connect quicker into these ecosystems, provide the financing, link up with logistic companies like Transnet so that we can move all those documents electronically. But in order to do that, there is support that is required from a regulatory perspective that enables those type of ecosystems. From a legal perspective, there's a lot of developments happening about how we standardize the engagement between the different parties in the ecosystem. So I think there's no lack of innovation. We need to ensure that the interoperability is there. We need to ensure that we deal the regulatory and legal environment so that these are enablers. And I think, you know, watch this space over the next year. We've seen a lot of developments in the last year. We're going to see a lot more happening. But I think the key theme that I've taken from today, from each one of the panelists, is, again, it's around collaboration. The banks can't do this in isolation. The fintech can't do this in isolation. Not even the logistic players can do this in isolation. It has to be collaboration across the entire ecosystem, supported and enabled by regulators. That actually, I think, is the game changer for us.
Collaboration is going to be the game changer. It's a beautiful way to close off the conversation. A very big thank you to Michelle for that. But really, maybe just to lift some of the more important sound bites that we've heard, collaboration certainly being one of them. The lived experience of women in the free trade agreement is important, and thank you very much for lifting that as we look at how do we dial in and tap into some of the violence that they are accustomed or vulnerable to, and how do we respond with the right security measures. We've spoken about at length at how do we de-risk the participation of women and young people and begin to normalize their participation, making sure that we're intentional, that they're not crowded out of the opportunities that they are. And how do we get institutions to also step in so that we can begin to change some of those numbers. 90% of all projects failed is one of the statistics we heard as well. And of course, how do we just get the job done? A lot of the insights shared pointed to the fact that these are conversations that have been ongoing for some time, but at some point we've got to just be deliberate, intentional, and get the job done. So I'd like to thank all of you for joining us today, including of course all of those who joined us online. It's been an absolutely rich engagement as we explore the opportunities that in ways we can involve women and young people and young women to benefit from the AfCFTA. I'd also like to say a big thank you to Fadzai, to Michelle, to Portia, and to Pidi for bringing their insights and experiences in such a dynamic and engaging way. From myself, Nozipho Shabalala, until next time, it's goodbye.